Welcome to Grow My Business or Sell It, the podcast that helps entrepreneurs in 3 ways: how to grow your business in the most cost-effective way, how to sell it for as much money as possible, and how to invest the proceeds of all that hard work. Whichever stage you're at, listen up, because I guarantee you'll take something valuable from every episode. Welcome back. As you know, Beaufort Society is based in Richmond, southwest London, but through the miracles of technology, we're travelling all the way to Richmond, Virginia to meet today's guest. She has huge experience in private equity and M&A, culminating in her current role as CEO of MacLaurin Group, providing technology support to both sides of private equity transactions, the buyers and the sellers. She's also a very active angel investor, mentor, and chairwoman for fast-growing companies, and is the author of the best-selling book, Courage to Lose Sight of Shore: How to Partner with Private Equity to Grow Your Business with Confidence. When it was published last year, the book was described by Entrepreneur magazine as one of the 9 must-read books to prepare entrepreneurs for 2021. The author is Kelley Powell. Kelley, welcome to the show.
Thank you so much, Graham. It is lovely to be here with you.
Now, your background is very data-driven through a range of analyst roles that gradually progressed into executive positions. And how has that kind of data-focused background influenced your approach to M&A deals in the private equity space?
There's right now where people will ask, you're in data and technology. Maybe we don't need that. We're not a data company. We're not a technology company. But what's been fascinating is how every company is now seeing themselves as a data company, a technology company, because you're utilizing it to grow your business. And on the data side, I've just always found it fascinating because data tells a story, right? And I talk about this in the book. If you look at the data and you don't like the story it's telling you, you can change it. So being able to constantly look at what the data is telling you about your business, it isn't, right? A lot of people think it's looking backwards. It actually helps you to look forward and to know where it is you want to go and are you getting there? So I find it a critical component of growing a business.
Okay, well, I mean, you've certainly been key to some significant growth in your roles at Lexmark and Royal & Company. I mean, what did those roles teach you about the best ways of driving growth in an organization?
It's as you talk about Royal & Company, when I got the call to join Royal & Company, because I had been at University of Richmond, to your point, responsible for the data analytics there as they think about bringing students in. And when I went to Knowledge, which was a startup, which ultimately was bought by Lexmark, every bit of that was getting data in, getting data out, being able to have that part of your workflow. So I had been a client of Royal & Company when I was at University of Richmond. I had been an integration partner as I built a business with Knowledge Corporation. And so Royal & Company was this business right here in Richmond, Virginia, that not many people knew about because we were a marketing company that worked for colleges and universities. So everything we did had the college and university's name behind it. So we were really the magic behind the scenes, and that's what we wanted. Our role was to be able to lift up and make the colleges and universities successful. And the truth was, every client that you would talk to, including myself at University of Richmond, we'd say, Royal & Company is a fantastic company. Everything that they do, we just wish they'd be better with their data. And so when I first got introduced to them, this was just one person coming in, help them get a handle on their data, which, at the time I was kind of joking. It's like, are you kidding me? I'm getting to do exactly what I love to do. I would have done it even if they hadn't have paid me, but I'm glad they did. But that position then led into a role at Royal & Company that built out a data integration team, strategic analyst, business analytics, a warehouse, a team of folks who, to your earlier point, who are constantly looking at every week, are we meeting our clients' goals? Are we getting there? And then that grew into 25% of the company from just starting as a person of one, because it became such an important pillar of the work that we did. And also the value proposition of why you'd want to be the one to acquire Royal and Company, to be able to have that insight.
When you got there, obviously great company, but there was issues with the data. What were the sort of issues you found that had to be fixed in order to drive what I think became a 10x growth in the following years?
Yeah, it's probably a similar story with most founders. You start off and you grow a business, you have to make choices in what you do. And then before you know it, you've grown in a way that now you've got manual processes. We kind of joke sometimes when we'll go in and we'll look at a company to be a due diligence, and we only look at what it is that your systems are or aren't. And sometimes, it might be someone named Rose who's actually keeping count on a notepad, right? I mean, it's whatever your technology is as a founder that you've been using to grow your company. I think that the biggest problem that Bill asked me to solve when I came to Royal and Company was the data coming in and the data coming out. Because if the data coming in, if you can't consume it in a way that's accurate and reliable, then you can't do an analysis on it. And then you also have to be able to give it back to the client in a way that they can action it to as well. And there was this huge shift that I think, businesses now are realizing is it's not just about the transactional data of data going in, data going out. It's the behavioral analytics of when is my customer engaging? Where are they when they're engaging? Why are they engaging? And so those aspects of the behavioral analytics are really a key driver. And so that means you have to have an incredible technology team who's capturing all of that behavior analytics so that then you can action it. And I think that Royal and Company, well, I know they did. They took that and really adopted that throughout our culture for people to action on it. Because if you're not looking at the data and you're not doing something with it, then it's really a waste of money to invest in the data and analytics side of your business. It has to become a part of your daily conversations.
Oh, absolutely. And of course, that brings us into the whole area of change management, which, in the dim and distant past, I was involved very heavily in information technology myself. And, as human beings, we love everything but change. And I guess part of this is there's a technology element to obviously to getting on top of your data, but there's also quite a big human behavioral element, as you say. So what have been the kind of ways in which you helped the company to adapt to those kind of changes so that it became really central to the way the business was being run?
Yeah, so this is when people that know me are going to be listening and they're going to kind of shrug and go, oh, yes, she actually does do that. I talk about in the book that create an excitement committee over change. And there's this, I talk about the valley of anguish, which is a real thing, and you have to be ready for it because, when you first start, there's this, you start excited and you're going to get something done and everybody's on board and, you're moving forward and change is coming and you're talking about it. And it really is exciting. We're going to take the company somewhere. And then you realize it's really hard work. And then the next thing that happens is maybe it's not going as to plan. Maybe it's not going as quickly as we wanted. Maybe there's things that we didn't think about that, oops, we have to step back and Now we have to think about that. And, maybe those software development team who said it was going to take, 6 months, actually it's going to take a year. And I always laugh about the fact that it's like we give them such a hard time because we say, wow, these software engineers, they're never right. They're always late. But if we're really honest about it, it's us on the business side changing, right? Moving the target for them on defining what the product is or who the customer is or what we want to get out of it. So, you get down to this low point where, we refer to the Valley of Anguish, and Jim Milbury, one of the partners at Parker Gale Capital now, he was with Chicago Growth Partners at the time. He would warn us about this. And when we were there, you're in the middle of it and you just like everybody just wants to just throw, let's just throw in the towel. Let's just give up. This is never going to work. We're not getting there. We've gone too far. And you will have to make that decision. And it's a tough decision for founders. Do you keep moving forward with the investment? Do you put the money in? Do you keep going? And you've got to have somebody, as much as you may not like having me in the room at that moment, who's going to say, no, let's keep going and do whatever it takes to get you through so that you do get through it, because that valley of anguish is going to come. And the best when I've had a no success is when the people who became doubters and say, wow, we should pull the plug. We should have never done this. See, I told you so. On the other side, end up being the ones going, I knew it all along. Yeah, this was my idea.
Yeah.
Glad we did it, right? That's when you won. So you could just step back. Now you've got others to step in and become a part of the excitement committee. But you've got to really huge communication, bring everybody in, and truly have someone who is going to listen to why you feel that you're in the valley of anguish. What can you do about it? What is important? What keeps you moving forward? Because at that point, you're going to have to make some choices. And it may be, telling Kelley Powell, no, right? These are the things that you want, but is this most important to getting this project started and having our customers to be able to benefit and be successful with it? And that's important to have wins along the way rather than to get all the way to the other side until you're finally starting to get value out of it. But
well, there's obviously
I think the biggest thing
I
is
must admit
communication.
Yeah, and I think having an excitement committee is a great start, and recognizing the valley of anguish. These are terms that you don't normally hear in corporate life, so I can see why that would be quite powerful. But for you, once you'd kind of sorted out and added a huge amount of enterprise value at Royal and Company, you then go off into working as a freelancer, and you get involved in some really interesting M&A deals, including with a big UK private equity firm. So just tell me, within the bounds of confidentiality agreements and so on, what were some of the experiences that you had on those projects and what key lessons you took from them?
It is one of the reasons I wrote the book is that private equity, there's this whole mystique about what happens on both sides of the deal table. And there are going to be different kinds of private equity firms, both sides of the pond. You really have to find your right fit partner and what aligns. And I think the most fascinating piece for me was having exposure to the private equity firms that really were about alignment and the teams that I want to spend my time with, right? The people I want to spend time with, how they invest in their CEOs, what they do to be able to bring more than just money, but the operators to the table. And to also have the exposure to private equity firms that are not that type of, I'll call it personality, because private equity firms have the personality of their partners and what drives them. And being able to see, which is one of my recommendations, is see how you were treated in the process of the deal activity, because that is a proxy of how you're going to be treated as a CEO and the team later. Don't think of it as this is just a process. This is just a process. No, it's are they spending time to treat the people around them well, right? The associates that are coming in, that are bringing information, the background research, the things that you're supposed to be able to include across the industry and the marketplace, to be able to think about where we're going to grow and take this company. How are they respectful to those teammates that are coming in? How are they engaging in the conversations and the banter back and forth? Because this is your window into how you're going to be treated. And I have been really fortunate and blessed to be around the table with folks who their goal is to grow a company together, which for founders is life-changing and an opportunity that they may not otherwise have. So, I'm curious to your thoughts on that, because I know one of the biggest things that you are, you speak to is being able to get the most for your company as you're selling it. And, I feel very strongly that, there's what does it mean to get the most out of selling your business? Because it may not be the highest bidder, but being able to roll back in, have a role, just where Philippe, being able to then you were acquired. Now, how are you treated? Are you then going on to be, an advisor for other companies in their portfolio? Or are you just someone that's gone, that the expertise isn't there? So
No,
do your
absolutely.
research on that too first.
That's right. And one of my previous guests on the podcast, Philip Linek from the Czech Republic, he had an interesting experience because he built a really big packaging company in the Czech Republic, and he went to try and buy Bunzel's company out there. But they actually looked at it. Actually, we'd like to buy you. And having eventually bought his company and done the deal, they were so impressed with him that they kind of gave him this major role expanding across Europe into Asia Pacific. So they kept him on for, I think, 3 years as an advisor. And, clearly certain companies I've seen the way they operate, the founders couldn't wait to get out the door. But if you do the deal properly, you can actually get some massive benefit for your company from the skills of the founder who you've just acquired, So as you say, I think that relationship building process is absolutely key to a successful private equity transaction.
That's right. And his candor of being able to say, minutes, the day of, kind of moments right before he's signing the deal, he's even saying, wait, do I want to do this? And so it's very real. And, having a company, which, by the way, it was so fun hearing him refer to Tesco having family in the UK. It was fun to listen to him tell the story about that journey. But it's very real of, okay, going back to even the excitement committee of change management and all of that, really think through as a founder or CEO, am I ready to do this? And one of the things I caution about in the book is I have worked with CEOs that were going to stay on. You talk about the earnout and that aspect of it, who commit to something that they believe is 100% a commitment on their part, but they haven't done enough on the side of culture and being able to be a part of the what's next, that they end up walking away from what they thought was going to be a commitment and a bigger, win with selling their company, because the culture fit wasn't there. And so Yeah.
One
Good.
of the concepts you describe is that of reverse due diligence, and I think that's a very interesting concept where, and I think that touches on what you just been talking about there. That perhaps not only should you be looking at what's going to be in it for you in terms of the founder being acquired, but you need to go back and do the due diligence on the company doing the acquisition to make sure that it's going to work on all these other levels, like the cultural level.
I relate it to how you talk about, the only one who you can really count on that's looking out for you is the one in the mirror, 100%. And it's fascinating because folks hear about, even like the story, right? You got the phone call, private equity firm is interested in, I've got a buyer that's interested in buying me. And there's this mystique of, I have to be found. I have to respond to who's coming at me of wanting to buy my business. I know, with what you do and what I do, reach out if you're thinking about selling your business so you can, talk to the right investor, explore and see who is the right investor for you. But there's work that you can do. I would actually say that there's two things kind of in that realm. Um, One, as 100%. You, there's ways to go and see what has been their success with previous investments. Talk to the previous CEOs. Ask them if they have folks that they can talk to. Are there CEOs involved in the way that you just described? Unless of course you want to get in the vote and you want to sail and you don't want to have, you never want to have your phone ring and have a conversation about it. But if there's ways that you want to be involved, know that, and then figure out if the investors, private equity firm that you're aligning with have had success with their promises. Is it that they're going to bring operators to the table? If they are, then how have they done that in the past? Not just right. The way I think about it is, don't tell me what you're going to do. Show me what you're going to do. And again, that's the best way that you can show me what you're going to do is how have you spent your time? And I think about it almost like a balance sheet, right? However you're spending your money is what's most important to you. So time is the most important asset. How are you thinking about that? Curious if you agree or disagree, and then I'll share my second point on the whole reverse due diligence aspect. But
I think it's something that people just don't do enough of, and I think there are a lot of times when, people are, I think, flattered by the approach. They start to see, dollar signs in their eyes, but they don't think about what's going to happen next in two ways. One is either, do I want to stay on, and if so, can I work with these guys? But the other one as well is, what if I stop now? I'm in the prime of life. I built this great business. Suddenly, I'm yesterday's papers. And what do I do when I've got my millions in the bank, but I no longer am the big cheese in the company? So there's all these aspects that you have to think about that are your behavior and how you're going to be treated, that often I find people haven't given much thought to because they're just swept up in the process of how much they can sell their business for.
That's right. And building on that before we circle back to the reverse due diligence, that makes me think about folks are also afraid of walking away from a deal that's maybe not the right deal because you think that there's not another one. And that can be a devastating scenario because, to your point, if it's not the right deal, that's kind of your worst case scenario if you weren't brave enough to walk away from it and figure out. So that's the know your value, know your story, know what in the book I talk about as far as know your non-negotiables. And you have to know what's important to you and what you want before you can find that right fit partner and to know how to recognize them.
Absolutely.
because on the other side, it's done. There is no going back once the deal is done.
Okay,
You're
so
moving
I'm
forward.
in suspense here, Kelley. What's this second aspect of reverse due
Okay,
diligence you
this
want to share?
reverse due diligence. Yes, let's go back. So, it's that the concept of investing in yourself. Um, we'll go in and we'll do a technology due diligence, and we'll hear, well, I wish I had known, and that's at the time of a deal happening. And the answer is that you could have known. So, if you are thinking, even before you're thinking about going in a process of selling your business, invest in yourself by finding someone like MacLaurin Group who can come in and do an assessment of exactly how we would do when we're getting paid by a private equity firm to do an assessment, look at recommendations. Where is the company? Where can you take the company for growth? But also where are things that need to be addressed. And I think people get a little bit nervous about that second piece of, yeah, but if my company is not perfect, that might scare buyers away. That might get a lower price for evaluation. It might, but it doesn't go away. And so being able to have an opportunity, if there's things that you can address yourself before you even go into a process, I relate it to putting your house on the market for sale. How many times have you either yourself experienced or you live in a home 10 years, you don't really think about the things that you need to upgrade. You get ready to put the house on the market, you make these investments and you upgrade, and you, whether it's paint the walls or upgrade the dishwasher that's been been dying for the last 2 years, and you think, wow, the house is perfect now, I don't know if I want to sell it. Why? And you didn't do it for yourself, but you're doing it for the sale. Same thing for selling a company. Maybe the dishwasher doesn't matter because the buyer actually has plans to completely wipe out the entire kitchen and do a renovation because they need it bigger, part of that growth. So it doesn't matter. But maybe they just cannot stand the paint color. And so it immediately turns them off when they walk in, and they never get back to the part of the house that's really the true selling point of the company, of essentially relate that to your company. So taking the time to pay someone to come in, because you may not ever have access to the due diligence that happens, or why recommendations that were being made. So do it for yourself so you can figure out what's going to be said in the process.
That's a great analogy to the preparation of a house for sale. Now, obviously, that also brings us on to your decision to become the founder and CEO of MacLaurin Group. So, was there a particular kind of gap in the market that you identified that you felt needed to be filled? What was the kind of motivation for you to start the business?
We did. And I will say that, I'm a big risk taker, but going back to the data side of me, it's going to be a calculated risk that I've looked at the data and I've decided, okay, worth it, let's go. One of the things that we were seeing, one of our partners was a partner at a private equity firm. One of the things that we were seeing from our own experience being on executive teams, being on deal teams, being a part of the ecosystem, is that there was this gap. So technology operating partners weren't really a part of private equity firms, because that then becomes a cost that can't be built back, right? You describe the management fees. You get it, right? There's a management fee that you do as far as being a part of the team. And that's coming out of the pockets of the private equity firm. But being able to make it a part of the investment at the time of the transaction, MacLaurin Group found that opportunity to, okay, how do we become a part of the process as a way of making us a part of the investment at the time of the sale, and thinking about how would we grow. So being able to do that in a way that you're not after day one of starting a new company saying, okay, what do we do now? And oh, that's going to be another $1 million project that we didn't take into account at the time of sale. Now that becomes an expense, which is not fun at all, where we could have been more thoughtful about it, as a part of the deal team. I have seen a shift. Well, before I talk about the shift, so for 6 months, I was calling and talking to, folks that we had been hugely successful in ventures together before. So here's what I'm thinking. Am I crazy? Do you think it's a good idea? And I was hoping, Graham, that not everybody was just being nice and not want to hurt my feelings. That said, Kelley, please do it. We'll work with you. Like, can you start today? When are we doing this? Have you started yet? Yes, I want to be a client. I thought for sure some are just not wanting to hurt my feelings. But as it turned out, they were very sincere. So when we started MacLaurin Group on day one, we already had work and clients from the conversations of asking, like, what is your pain points? What would this look like? What is it that you need to fit your need? I think as we've seen this shift, there are certainly more boutique firms like ourselves, and you also see the big accounting firms wanting to buy advisory firms. And, we've been approached many times over the last several years to want to be acquired to loop in, whether it be a subsidiary or other, because now folks are seeing technology, and those conversations are an important part of the process along the way. It's not something that just needs to be the afterthought. So I think the talking to people you trust, talking to who would be your customer, and making sure you've got a product and a need before you start a business. It's that whole not having a solution and trying to find a problem, making sure that there is a problem that you are providing a solution to.
And so do you generally get brought in by, the private equity firm that might want to be, targeting a company, and you're brought in to do a sort of a technology audit of where they are at the moment and how good a fit that would be for the acquiring company?
Yeah, we would do due diligence before a transaction. Also, strategic roadmap looking forward. We would also do for not everybody. So those clients that we've done it for, nod to you all. Every client is your most important, but certainly there are some that, you've been successful together. So back to that whole valley of anguish, what you're getting into. That if you take on a, digital transformation project where you're really having a big investment that's going to be a little bit, longer timeline, that you're doing that in a way that the PE firm is being that excitement committee, and they have a lot of power to be that excitement committee behind you because, by the way, they're writing the checks, which is interesting because I think as technologists, a lot of folks think technology is, well, we've got a budget. We've got to make sure we don't spend too much. We're more of a cost center. We don't want to, spend the money to invest. And there's this big shift for folks that are truly, whether they're angel investors, whether they're, VC, whether they're private equity, family offices, they are thinking about technology in a way that it is an investment to truly grow the company. And so sometimes it might be saying to the team, I don't think you're asking for enough and what you want to do to be able to grow the company, which is just a different shift in a mindset for most technologists. But yes, and I think what we've, curious if that resonates with you and how you've kind of shifted in your investments, if you're seeing that kind of across the board of thinking about it in that way as technology being really a part of the conversation rather than a separate you know,
Oh,
half
absolutely.
extreme, more extreme.
One example recently, we raised some growth, well, really kind of launch and growth capital for a new clean energy provider. And one of the things that's been a real bottleneck in the energy customers' minds, if you like, has been the level of customer service in the kind of back office. And what they've done is they've introduced a whole kind of robotic technology in the processes of how you kind of acquire and provide and provision power to houses and so on. So they've worked with a robotics company to develop this intellectual property that's unique to them. And what it means is their cost in terms of human being equivalents per thousand clients are something like a quarter or a third of industry norms. So they've managed to, without changing anything else in the business model, they're making a much bigger margin per client simply by automating the back office.
Yeah, I love it. And curious because when people hear that, they will say to me, "Yes, but right, robotics are just they're replacing, the human element, the jobs, and so we're not doing it." So, no, if it's about growth, it is allowing you to have the ability to grow, have folks spend their time in ways that are most valuable and be able to grow and have you all benefit from that we're doing in a way that uses the automation for us to grow as a company. It's not, I don't think of it as replacing. I think of it as augmenting and creating other opportunities for roles and jobs in a company. That is the higher value of how folks can spend and invest their time for a company.
Yeah,
So,
absolutely. And of course, one of the things that we do, and I'd be interested to hear what your approach is, but because you get to see obviously inside, under the hood, as it were, of the company in these kind of roles, we often end up taking an investment in the company. And I know you are yourself a very experienced angel investor. So, within MacLaurin Group, do you see beyond the actual kind of operational role, do you see the potential for getting involved as an investor as well?
I love that you see that, Graham. That is, I think when we first started MacLaurin Group, we would tell people all the time, well, we will do angel investing as more philanthropic. It's not the business that we're in. We are operating advisors. We're outsource operating advisors for portfolios and private equity. And as we grew, it's like everything else, how you spend your time in doing the things that you love to do. We would do more of that angel investing. We would write checks, we would co-invest, as well as take on sweat equity. Again, had to be for the right founder. We would believe in them. We knew that they were going to be sticking around during our investment. We felt like we had expertise that would be able to surround that founder and be a part of the growth. And so we've done more and more of that, where the honest answer is there's been a shift. And even though we remain to be operating advisors and we will be pulled in on projects, we've paused a significant amount of opportunity where we've said no to in that way, so that we could focus more as investors and being a part of that growth. And I would say that is how I enjoy spending my time. And so it's been an interesting shift that you picked up on. So yes.
Okay. Now, your book is written really, I suppose, from the perspective of a founder who's thinking about a partnership with private equity and all the benefits and challenges that brings with it. And you describe him as the captain of the ship, and he kind of partners with an admiral of the fleet. Now, obviously, we don't have time to cover all 9 stages of the journey, and people should buy the book if they want that. But maybe you could just pick out a couple of the most critical pieces of advice in the book that, if I'm the captain of the ship, what are the 2 or 3 things I really need to be thinking about if I am considering a private equity partnership?
Yeah. Yeah, and as far as the admiral, I will say there is that I wanted that theme to carry through as a red string throughout the book. You're still captain of your ship. You're just one of many in a fleet, so you have an admiral. And so I think the most important recommendation I would have in that journey is we've already talked about it. Invest in yourself first. Do take the time to do the reverse due diligence of who else is out there. It's know your own story, be able to articulate like what is my story, so who am I looking for? And so part of that is investing in a reverse due diligence for yourself. I think the second piece that I would say is really critical of find that alignment and know your non-negotiables. We talked about culture. If there are things that are going to make you miserable on the other side, make it a non-negotiable. Do not be afraid to walk away and stand firm, because you will find the right fit partner out there for you. There will be others. If you have a phenomenal business, there are others. There's a Graham out there who wants to talk to you. There's a Kelley who wants to talk to you. Don't be afraid to walk away. And I think the third piece is, it's not all about the money. It definitely has to be about getting the most out of selling your business, and what is the go forward. I talk about the what's next around the cape, on the other side of it, and that's a huge piece. And I think, go ahead. You were going to say?
Yeah, I was just going to say, I think for many family-owned, founder-run businesses, you only get one shot at this. So, like you say, don't necessarily, marry the first person that asks you out on a date. It's kind of, you've really got to be prepared to think, well, is this the right deal for me? Is it the right for my children? Because they might inherit the results of all of this. It's a big decision, and as you say, having the courage to walk away is something that I think sometimes people are lacking, and I think that's one of the key pieces of advice I would take from you. Now, just moving on to the macroeconomic environment, and I do risk getting on my hobby horse here, so apologies in advance, but it seems to me that politicians on both sides of the Atlantic undervalue the role of small and medium enterprise in creating wealth, jobs, and taxes. And we're seeing taxes on business and entrepreneurs rising. We're seeing 87,000 new IRS agents being recruited in America. What's your assessment of the economic outlook for the next few years, and how might that impact private equity transactions?
There was a lot in that question, Graham, a lot in that question. Let's see. First, I would say, I fall in that category. So I agree. I think you're right. I think having a voice and continuing to try to be advocates in that front is really important for all of us. I think what I'm personally seeing is there is, we had this frenzy, right, of activity. And so now there's starting to be a slowdown. And what that means is I think that there is a focus, that is, in other words, there's not going to stop. Activity is not going to stop. We even saw that, at the start of the pandemic, everybody was worried that all activity was going to stop, and I literally would schedule conversations with clients from those who I would describe as more of the risk takers, who said, no, we're going to continue to push on. We're going to invest. It's much like I've heard you talk about how folks that did maybe cut back too much and then found themselves in a situation that then they didn't have the human capital when things came back. There are different leadership styles and personalities. So just because it's slowing down doesn't mean that there isn't going to be opportunity there. It means that it's going to take more time to find the right fit. I do think that some of the frenzy and the activity, so that may not be a bad thing, because I do think some of the frenzy and the activity, I think that some steps were probably missed, maybe in some of those additional due diligence efforts, because folks didn't want to miss deals. Things were working too fast. They wanted to be the ones that would take a shorter timeline, make it easier, take out the friction in the process. And we'll see whether or not that turns out to have been the right decisions or not, or were those missteps going to hurt with some of those investments. I'm an advocate that some of the slowing down may not be a bad thing. It may end up being that we have the right investments with the right alignment, and they may end up having even greater returns ultimately by having a little bit more breathing room in the process. So, my outlook is positive, even in the slowing down.
Yeah, no, absolutely. And one of the points I frequently make to Beaufort Society members is that these days there's a lot more value being created in privately held companies than there is in companies on the public stock markets. And in fact, if you look at things like the number of IPOs going on, that's really nosedived recently. A lot of wealth is actually in privately held companies. So you actually have to be well connected to understand where these transactions are happening and how you can get involved in them as an investor, because you're probably, if you take something that's privately held and you take a 5 or 6 year view of that investment, you're probably going to end up with a much higher exit value than if you try and buy FANG shares in 2022 23. So would you support that? Yeah,
I support that. And again, another reason why I wrote the book, because it does, there's this mystique around it and how you even start to get involved. And I think, part of that is showing up, and learning. One thing I would caution to founders or CEOs that are thinking about it. I know we weren't going to go through all 9, but you can. If it's okay, I'd say one more. Making sure that when you go through a process, you have something to sell on the other side, because it is a process. And in doing so, deputize somebody on your team, whether it be, they're going to be you making decisions for the rest of the company and the team while you're in a process. Or maybe it's having them be a part of the roadshow and take on some of that workload. And as a part of that, the folks that aren't a part of that roadshow, let them know that they're being deputized and they're keeping the business running is huge value. And it's critical to the success because, when people aren't a part of, they're not in the room, they get a little bit nervous. And is my role as important? And with silence and expectations, people create their own scenario. And so keeping your senior executive team in the loop doesn't mean that, one, you have to do everything. And it also doesn't mean the entire team has to be involved with everything, because it's a heavy load. It's a heavy lift.
No, absolutely. And yeah, the distraction factor of going through a process like this is enormous. And as you say, you probably take yourself out the business for 6, 9, 12 months, whatever. So there has to be somebody else minding the store. Otherwise, the value at the end of the process will be a lot less than you hope.
Right.
Absolutely. Well, that's probably great. A great advice to end on. As ever, the clock is against us, Kelley. But thank you for sharing so much value today. We'll put links to the book, and also if anyone wants to learn more about MacLaurin Group, follow the link in the description. But thank you very much for joining us, and thanks for everything you shared today, Kelley.
Thank you, Graham. Lovely to talk to you.
If you'd like to suggest topics for future episodes, appear as a guest on the show, or invite me onto your podcast, you can get me on graham@grahamrowan.com. Thanks for listening, and I'll see you next time on Grow My Business or Sell It.